So, if you're anything like me, you probably have a smartphone gallery full of random things like memes, screenshots, B-roll footage, those 12 selfies that you took and you only ended up keeping one of them. And maybe you got some receipts in there. So, no shame, we've all been there where we're taking a photo of receipt or stuffing it in a drawer or a wallet somewhere to forget about it until tax season rolls around. And then we're like, oh, yeah, I have to make sure that I'm claiming everything. That's why today I'm going to be talking about what to do with your receipts so that you can legitimately claim your write-offs and not be scared if you're audited in the future. So what we're going to dive into is what documentation you need to claim write-offs. Then we're going to talk about how to organize your write-offs so that they're audit proof. And then we're going to talk about what to give your accountant at the end of the year, how to stay organized and hand things off. What do they need to see? What do they not need to see? And if you're not familiar with me, my name is Jamie. I'm a CPA based in Toronto, Canada, and I'm the founder of Chill Books. Chill Books is a fun, approachable, educational course that teaches you how to do your bookkeeping, how to manage your QuickBooks, and all of the essential financial concepts that every entrepreneur needs to know. So let's get into it. First things first, documentation. When you are claiming a write-off or a business expense, side note, if you don't know what this is, grab my free solopreneur write-off guide. You can comment the word write-off below and I will send you a link to download it, or you can grab it at the link in my bio, wherever you're watching this. But when you are claiming a write-off or a business expense, you want to make sure that you have some sort of documentation to support that claim. And what that documentation typically is a receipt or an invoice. And what that receipt or the invoice should show is who you were purchasing something from. So actually, let me give you an example. Let's pretend like you purchased Chill Books. You purchased an online course, Chill Books, from me. I would send you a receipt showing my name, what was purchased, which is Chill Books, how much GST or HST I charged to you, my GST or HST number, and I think that's it. Let me check if I was missing anything. Oh yeah, and that's basically it. The date, the amount, what tax I charged, how much tax I charged, and what you bought from me. So that's what I would send to you, and that's what you need to keep as documentation to claim the write-off of purchasing Chill Books. So just to recap, when you're claiming something as an expense or a deduction, you need a piece of documentation, which is usually a receipt or an invoice that shows these things: the date that the purchase was made, the amount that you paid for the purchase, any sales tax that was charged, and the sales tax separated out, how much sales tax you paid, and the sales tax number. So I forgot to say that too as well. You need that GST or HST number so that you can claim the input tax credit for that. So what this means is that your credit card statement or your bank statement is not appropriate documentation to claim a write-off. So get your receipts, whoever you're purchasing anything from, make sure they're giving you documentation so that you can claim that properly, legitimately, and not be scared in case of an audit. And now I want to talk to you about how to organize these receipts so that you are audit proof. Number one, to keep in mind, you need to keep these receipts for 6 years after the year that you filed that tax return. So let's pretend you filed your 2020 tax return. You have to keep those receipts until December 31st of 2026. Second thing is that you can digitize your receipts, which is the way to go, and it's what I recommend, but you want to make sure you're using an appropriate software that CRA approves of. Essentially, they want to make sure you're using a software that doesn't allow you to go back in time and change things. They don't want you to upload a photo somewhere where you could of a receipt, and then down the line you could go in and change the amount or change the vendor or whatever, and it not show in your system. So that's where I recommend using QuickBooks, and not just because of the fact that the receipt management is approved and it's built in, is because if you are ever audited, the CRA might ask you to provide a listing of receipts to support a certain category of expenses. So they might say, send me all of your receipts for your meals and entertainment for the year. Or they might say, send me these 3 receipts that represent these expenses that you showed us in this review engagement. So they can be asking you to slice and dice your data in many different ways. And then once they get you to slice and dice your data, your financial data, they'll ask for specific receipts in there. And I've even had them ask a client for specific vendor. So they'll say, okay, I know you spent a lot of money with this person, with this vendor this year. Can you give me the 3 receipts that support 3 most expensive purchases with this vendor? Because you don't know exactly how they're going to ask you for the data. And so what you want to do is make sure that you're using a bookkeeping system so that however they ask you for the supporting data for your expenses, you're able to just click and download the receipt based on the category of expense, based on the vendor, based on the date, however you want to slice and dice it. This is the problem with using an Excel spreadsheet. You have all these numbers in an Excel spreadsheet. There is no receipt attached. So using a bookkeeping software like QuickBooks to digitize your receipts is going to be the way to go to make sure you're audit proof and make sure that you're not scared of having to find things in the future. So it's one thing to have those receipts living somewhere. It's another thing to actually be able to access them 6 years down the line with ease. So that is my tip on organizing and being audit proof is lean into systems. They will have your back. The last thing is what to give your accountant at the end of the year. So this is something that I think people get a little confused about. So contrary to popular belief, your accountant does not want to see your receipts, okay? Your receipts for your expenses are for you to hold on to in case someone asks you questions down the line. Your accountant wants to see a summary of all of your expenses by category of expense. So how much you spent on advertising, how much you spent on insurance, how much you spent on subscriptions. They want to see what you spent by category in total. So in a financial summary, which is the profit and loss statement. And that is what they need to file. Based on what you give them, they're going to have questions for you maybe about certain categories, but they don't want to see all of your receipts for the year. They just want to see a summarized financial statement of what happened, and then they can ask you questions saying, oh, this category looks high. What was in there? Or do you think you're missing out on expenses because this category had a lot more expenses in it last year? Those types of things. So your ideal situation is that you're using a bookkeeping system where an accountant can have access to it. That way they can go in there and see your financial reports. And if they have questions, they can actually poke around and just pull the receipts for things that they need more information from. But you should not be giving them all of your receipts at the end of the year. You should be giving them a summarized financial statement showing where you spent your money in the year, where you made your money, and all of that jazz. So if you don't know what to give your accountant, grab my free solopreneur write-off guide. That gives you an idea of all of the categories that you should be organizing your expenses into. And that will be a great first step for you to start getting things in order long before tax season. So to recap, here are the 3 things to keep in mind. Number 1 is you want to make sure that you have the right documentation to support your expense claims, which looks like receipts or invoices and not a credit card statement or a bank statement. Number 2 is to have a system to organize those receipts so that if 6 years down the line, CRA comes knocking on your door looking for documentation, you can just provide it to them in a few clicks from an audit-approved software like QuickBooks. And number 3, what to give your accountant at the end of the year. Your accountant wants to see your financial statements. They don't want to see all of your receipts unless they're digging in deeper to understand your numbers a little bit more. In that case, it pays to have a bookkeeping system so that they can poke around and get the information that they need without you having to be a part of that organizational process because you've already organized everything through the year. So I hope this video was helpful for you. Don't forget to grab my free solopreneur write-off guide. You can comment right off below this video, or you can head to the link in my bio to grab it. It's going to help you start to organize those receipts in categories. And that's all I got for you today. Thanks for watching.